Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for your first daily cryptocurrency market update in over a week. Apologies for my absence. I had lots of very nice messages from you guys asking where I was and if everything was okay. I decided to take advantage of the lackluster kind of price action that we were having in the markets. May is typically a bad month for engagement on social media. It's also a lackluster month, typically for the markets, as you have a lot going on. But ultimately, we are back to normal, back to your daily cryptocurrency market updates. And for those of you that are new around here, every single day at 1 p.m., we release a market update where we cover the cryptocurrency market and look at it relative to the macro environment. And you guys know that since the start of the year, we have been long and strong. And what I want to do to start this video off, we've got a number of things I want to cover that I'll outline very quickly. We're going to be looking at the charts. Bitcoin, the S&P, the NASDAQ, gold, the dollar. We're going to be kind of coming back into things and looking across the board and looking at how this year's played out. Has it paid you to be bearish? And then we're going to look at some sort of revelations coming out about the debt ceiling. The debt ceiling has been this dark cloud over the markets as the lovely politicians threaten to fight one another in the BS arena of politics. And say that they're not going to up the debt ceiling. We've said they're always going to up the debt ceiling because the US will not default on its debt. And people say, okay, well, you should be in the dollar just in case they do. Well, the dollar itself would be in question. Fiat is a debt-based game. And ultimately, every time fiat comes into existence, there's the asset, which is the fiat, and the liability, which is the debt. So if they defaulted on that, it would come into question everything to do with that. And then we're going to look at a number of other things. The week ahead, what's going on, the macro, interest rates, everything. We're going to be recapping on quite a bit in this video. So strap yourselves in, guys. But it feels great to be back. We've got a number of things coming. The studio is getting finished. I've got a number of sort of acoustics to get put in, lighting, stuff like that, which is all coming this week. We also have a bit of a upgrade in regards to sound. Now, this arm is quite big, so I may change it out, but we've got upgraded microphones, upgraded sound systems, everything coming to you guys, because I do believe that we put out some of the best content in regards to the markets that there is on YouTube, period. But I've always been very old school in how I film my videos and very organic and natural in regards to the fact that I've just got on in front of the camera and showed you the charts and kind of gone off that. So we're going to really be upping the production. So it's great to be back, guys. I don't want to waffle on for too much longer. Let's get into this daily cryptocurrency market update. And we are going to start off, of course, with the Bitcoin chart. So you guys know that we took a position after being out of the market for 2022, assessing the macro environment. What has driven everything? It's been interest rates. And essentially the story goes, you had, of course, the March 2020 events, and then the government's printed a load of money, even though they will say that they attribute around about 0.5% of the CPI to the print-a-thon, which is nonsense. Inflation is a monetary phenomenon. You had governments print a load of money. This caused a bull market. And then they decided, after a lot of quantitative easing, do quantitative tightening, which caused a bear market. And we started looking in December at the possibilities of, okay, we're very late in this bear trend. And ultimately, we took a long position at the start of the year. We came out publicly on here. And of course, with my Patreon members, we were looking at this quite a bit back and, of course, positioned, bought quite a lot of crypto. If you want to find out what and where, please do consider checking out the Patreon. Lots of things coming, websites and all sorts. But ultimately, we are long in the cryptocurrency market. And since the start of the year, Bitcoin is up 60-something%. And I actually think that Bitcoin stands a very good chance. We've got this inverse head and shoulders target with a non-log target of around about 35K and a log target taking you to 40 plus. I do believe this year you're going to see a 40 plus Bitcoin. I think that altcoins have been somewhat lackluster, but this will change. Remember, guys, you will know that I come from the school of Bitcoin 4-year cycle theories, as it's really all we had to go off of back in the early days. I've been in crypto for a hell of a long time now. You're kind of playing out very similar to how we have previously. But if you look at Bitcoin dominance, I do think Bitcoin dominance is going to roll. This is quite toppy in my opinion. And you're right at this range level. I think altcoins will do quite well. If you look at ETH, BTC, and some of the BTC pairs, some of them look pretty good. But has it paid you? This is all stuff that we've said. It's been a very doom and gloom macro environment. And actually, we've said, do the charts match the noise? Do the charts match the narrative? Me, as a technical analyzer, somebody who wants to do this professionally and does it for a living, I care a lot more about the charts than what people are saying. And now that we've seen, and we'll play this clip in regards to the debt ceiling, a bit of headway made there. What are the bears now going to go on to? The thing with the bears are people were bearish down here. You know, and these are the same people that say, don't, you know, short support, don't long resistance. Really missed all the divergences that were taking place. We were on it as a channel. We were on it as a group. We were on it as a Patreon, and ultimately have made some good money this year as a result of it. And has it paid you to be bearish this year? The answer, in my opinion, is no. We still do think, and where I fundamentally disagree with the bears, that the demand destructive event, the yield curve and what it's predicting, I don't think plays out for a while. And I think there's this window of opportunity as rates go sideways, which we've looked at. S&P, the prior 3 times rates have gone sideways, has gone on to make new highs. We think the same thing is going to happen again. And we ultimately have technical structure that's going to take us there. So the people that were shorting this resistance got well and truly wrecked. Look at the NASDAQ. We have this AI driver. Maybe AI is the narrative, but guess what? The charts have already told us and led us to the Holy Land. And you can see here, you've been under this resistance, this kind of grind line. If it was the chart was the inverse way, which we like grind lines, we like to see them break because ultimately it shows a kind of weakening of whatever trends in place. And that's really what we did at the start of the year. We looked at the fact that, okay, we're late here. NASDAQ has gone on. You could have an inverse head and shoulders for your NASDAQ. If you look at the likes of Apple, is Apple in a bear market? Is Meta in a bear market? You tell me, ladies and gentlemen. You've got similar DNA here. Altcoins, by the way, are here. And they're in this period here, ready to do this. Mark my words, ladies and gentlemen, you will see this commence. You know, they've rejected off of resistance. Using DOT as an example, you guys know DOT is one of my favorite altcoins. They've rejected, and they will catch up with the tech sector. The spotlight just needs to, and the spotlight's not on crypto at the moment, but it just needs to come back. You want to be investing in this space, and this is not financial advice, when nobody else wants to. That's what made me a hell of a lot of money in the prior bull market. And how many of you wish that you had been a partaker in the bear market, the previous one, to benefit from the bull market? That opportunity is here again, yet all people want to do is complain and cry. Do not look a gift horse in the mouth, ladies and gentlemen, because, you know, it won't give you that gift. So looking at the NASDAQ's gone on and put in highs. We did say this. I wouldn't short, even though resistance is a good place to short, I wouldn't short this because you get wrecked. And the people short in the stock market have well and truly done so. The SPY being a bit more of a slugger, being a bit more of a workhorse. Again, your resistance coming into it. Bitcoin's at the same place, guys. Your resistance is going to get flipped. Look at that weekly candle. Look at these buying candles. The wicks on these. Someone's pushing that price up. People need to look at this. People do not do what we do on this channel, which is 360-degree analysis on the markets across the board. We are better than your macro guy at doing this. And we aren't a macro guy, we're a crypto guy, but we've had to get in tune with the macro and critically think about the markets in order to do well in them. So, has it paid you to be bearish? And is this still a bear market? Again, look at your apples. Amazon, not a massive fan of, but you did have a divergence here. Coinbase is a stock that we're actually very interested in. I think Coinbase does exceptionally well and becomes like, way bigger company than it currently is. But anyway, that's for another video. You potentially have head and shoulders here as well. Inverse head and shoulders that see you take upside. That matches what we're saying about rates. Take a look at, let's put the Fed's funds on here just to show you that again, guys. No one else does this and does this kind of analysis. This is rates going sideways into an aggressive tightening, after an aggressive tightening cycle. Look at what the S&P did. Went on to put in new all-time highs. And then went even further than that. And of course, then you had the March 2020 spiller all the way from you know where. Look at this again. Rates going sideways back in the prior to the 2008 crash. I think the crash comes later, ladies and gentlemen. Everybody calling for a crash now, they are the banks and I am Michael Burry. It's a bit of a reversed analogy there, because obviously Michael Burry was the big short, and now we're saying we're almost the big long. We almost find ourselves agreeing with the likes of David Hunter to a degree, not massively. But But look at what the S&P did on the sideways rates. Sideways rates are coming again, ladies and gentlemen. Again, even here, it didn't quite go on to putting a new all-time high, but your sideways rate period, the markets did very, very well. And actually, if you go even further back and look at what sideways rates have done, aggressive tightening, market slugs down. And then what happens when they go sideways? Boom. This is coming again. Your typical crypto analyzer, your typical stock market analyzer doesn't do this. You need to understand the debt markets are the largest markets in the world. The bond traders have always been looked up to by technical analyzers as the GOATs, as the OGs, because they are plugged into the system and the Fed. You need to understand those markets and have a good, and apply them to your markets, and you'll do far better. And this is why we've been able to call the big macro trends. That's what we're interested in as investors is, we'll be bearish when we need to be bearish, like 2022. Remember, we shorted Luna literally before it crashed. And a load of other coins. We called the FTX spill to the downside. We called it all. Well, obviously not the 79k down. I missed that. I have to be honest. I did think the markets were going to go slightly higher, but that's because I didn't pay attention to the macro. That's not a mistake that I will make again. And yes, there is still the possibility that Bitcoin comes back down and tests this 25k neckline. Very common. Look at the Nasdaq, for example, as a perfect. It's not a neckline, but it's a trend line. Broke it. Retest. You'll see it across the board. Remember, we didn't just look at Bitcoin against the dollar. We looked at Bitcoin against the Nasdaq. How's that performed for you? Oh, sorry, the SPY. How do you like them apples? Gold, it's doing well against. Gold's in a bit of a lackluster period. The dollar's beating its chest somewhat. The dollar, in my opinion, is going to fall. We did look at levels and we did expect this. Look at your bullish divergence here. People don't like divergences. We do. We just be, not to trade. As somebody that trades, we have Sal Method. I'm part of a group that is a trader focus group. And we have a certain method that we trade with. We don't trade divergences. But ultimately, has it paid you to be bearish? 5 months, nearly 6 months into the year now, you're still being bearish, and look at what the price has done. At what point do you admit you're wrong? Okay, most people are saying when we flip 30k. 30k was always going to act as resistance. Look at all this. And actually, it's very interesting. Look at where the volume by price is on this. It's down here, guys. Remember, we bought all these dips up. We're still buying the dips today, guys. And you can do the same thing. And if you want to find out what I'm buying, where I'm buying, please do feel free to join the Patreon. We've had a lot of talk about the debt ceiling. US 2-year yields is something that we're watching like a hawks. I need to see this roll because this has kind of gone against us. We think that this was the top. Obviously, Silicon Valley Bank, it played into here. I'd like to see this roll. You have to close this gap here. We'll see. We'll know we're wrong if it goes on to put in the all-time high. There's been a lot of tough talking from the Fed. The Fed, ladies and gents, is the adult talking to a child, and you are the child. And the Fed's kind of, you know how adults will sometimes bend the truth or exaggerate things to get the child to do what it wants? That's what the Fed are doing with the markets. They have to be hawkish with inflation still high. Go and look at true inflation. It's coming out at 2.8%. I'll flip over to my challenge just a second and say that. We've got the debt ceiling. And the debt ceiling, we've always said, is more like a rooftop bar with narcotics and all you can eat and drink and whatever you want. Seeing some really interesting things come out on a number of fields. But the debt ceiling, there's been a principle outlined for it, and they've introduced cuts. 50 billion when they're now at nearly a trillion in terms of exposure and interest rate payments. Good on you guys. Major central banks were expecting to pause in rate hikes soon. Now it's not a clear cut. Yeah, remember, this is what's driven the markets. It's always driven the markets. Low rates have caused this 40-year, Greenspan era. And now there's been this kind of flipping of this. And you can see that rates, another rate increase of 25 basis points is now at 67%. Remember what the markets did when they went from 75 basis points to only doing 25. They loved it. What are they going to do when it goes to no? Yeah, there you've got your fundamental with all our technicals. So looking at this, you do have an increase here. Likely to be coming. Now, I don't think they will. I think inflation's coming down. Remember, we've got non-farm payroll, which is expected to be lower than the previous ones, but still beat expectations. I'd imagine they've beaten 13 times in a row now. On Friday, and then you've got CPI, and then, of course, in... How many days have we got until this announcement? 16 days, you've got the actual announcement. they do know, markets will go completely crazy. I even think if they do another 25, markets will still do well because it's coming to an end. This is what we looked at the start of the year. No one else was looking at this, guys. Why do people not do this analysis when it's extremely relevant? You need to know what markets to look at. Let's look at some recent announcements in regards to the debt ceiling. I wonder what the bears are now going to move on to. You know, we agree with the bears in many respects, but ultimately we think their timing is wrong, and timing in the markets is everything. So this came out yesterday in regards to the debt ceiling. We're going to have more on it today, and then we'll wrap things up by looking at the week ahead.
I just got off the phone with the president. I talked to him twice today, and after weeks of negotiations, we have come to an agreement in principle. We still have a lot of work to do, but I believe this is an agreement in principle that's worthy of the American people. It has historic reductions in spending, consequential reforms that will lift people out of poverty into the workforce, rein in government overreach. There are no new taxes, no new government programs. There's a lot more within the bill. We still have more work to do tonight to finish all the writing of it. I do want to take a moment, though. I do want to thank Garrett Graves and Patrick McHenry for all their work on this, and for all the work that we're going to continue to do tonight. I know you'll have a lot of questions. I'm not going to take them tonight. Out of respect, I want to brief our members about where we currently are. I expect to finish the writing of the bill, checking with the White House and speaking to the president again tomorrow afternoon, and then posting the text of it tomorrow, and then be voting on it on Wednesday.
So we're going to get the text. It involved, you know, basically just upping the debt, and they said they're going to cut like 50 billion in spending. Look at this, though. Good job, guys. You're doing a really great job. Anyway, who am I to judge? So it is a bank holiday today. This is the big one. We've got a number of CPIs. Non-farm's going to be big, okay? Payroll's expected to fall to 180 from 253,000. To look at this week, inflation, in my opinion, is coming down. I'll show you true inflation, actually. Let's not be mean here. Please go and follow me on Twitter, guys. I need more followers. I deserve more followers. The universe knows I deserve more followers as well. And you're going to get a lot of genuine stuff on here. This is a pretty funny meme. Obviously, that's Eddie Hall and his son. What do we want? See if we can get some true inflation stats up here before I love and leave you. True inflation is currently at 2.86. Fed looks backwards at backwards data, lags by approximately 2 months. Inflation's a lot lower today than it was, and I do think inflation's coming down. I do think the labour market's looking weak. Let me know in the comments. You may completely disagree with me, and guess what, guys? That's fine. I still love you. It's A-okay. You're allowed to disagree with me. You should disagree with me, and you should call me out and leave whatever reasons you have for disagreeing with me in the comment section. Not only does it help me out with the algorithm, but it will help other people to see a different side of the argument. I'm bullish. We've stated that from the start of the year. Look at what the markets have done and tell me what you think. Look at the data. If the data suggested that I needed to be bearish, it's going to benefit. At the end of the day, the difference between me and other market analyzers is I have my money where my mouth is always. This is how I make a living. This is something that I'm, the path that I'm on, the journey that I'm on is being a professional, hopefully professional, sometimes not so professional, investor, and of course a trader for a living. And my money's where my mouth is. And the analyzation that I do of the markets reflects that. And ultimately, I'm not going to say something if I don't believe it and see the data's there, because I'll lose money as a result of it. It's that simple, guys. On that note, I hope you've enjoyed it. I'm going to love and leave you. Watch out for some of the, can you see this being the new thing? Updates that I have coming. Studio is being finished. I just need to get some spotlighting and lights and other stuff put in. And of course, get the guy in to finish this. That's all I've got for you guys. See you in the next one. Please leave a like, comment, and subscribe. Check out the Patreon. It's not for everyone. If you want to join it, by all means do so. Check me out on Twitter and stay tuned for some of the updates coming in the future. All I've got for you. Have a magic Monday. See you in the next one.